This is a look into a methodology known as market DNA. It's a system designed for the structural documentation of market behavior. We'll be reviewing the record of one such structural observation.
So everything starts here, with phase 1. This is the initialization of the cycle. You can see how the price action sets up what are called the M and P levels. These really serve as the foundational boundaries for the entire structure. Now, based on these levels, the size for each trade is calculated. And this isn't just a guess. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. It's all defined right from the very start.
Then we see the price move up and reach what the system calls the N level. Getting to this point is a key event. It triggers a partial release of the position, and at the same time, it allows for the accumulation of a safety buffer, which acts as a sort of cushion for the structure.
Now you might notice we're looking at phase 2 after phase 3. That just reflects the way the market actually moved. Here, the price moves downward, and that activates a secondary position right at that PC level we saw established earlier. As the structure continues to evolve, that safety buffer we mentioned keeps on accumulating.
And that brings us to phase 4. After that downward move, the price turns back up and makes its way to the upper boundary of the trapezoid. When it hits this level, it signals the completion of the entire structural cycle.
All right, so we've seen the 4 phases. Now let's look at the same event through the lens of fractals. You can think of these as structural snapshots. Fractal 1, which we see here, basically defines the initial structural encoding. It's the blueprint for the cycle.
As we move to Fractal 2, the picture gets more detailed. This view shows the structural development happening within those boundaries that were set up at the very beginning. You can really start to see how the price is interacting with these predefined zones. And here in Fractal 3, we arrive at what is called the activation window. This is the critical final stage. The cycle is approaching its structural completion, sort of gathering itself for the final move. So what is this activation window, really? It's the point where all the accumulated structural interactions, plus the element of time pressure, build up to a resolution. And that resolution comes in the form of a directional movement, or a release, that completes the cycle. Okay, let's look at the performance summary, the expected versus the realized outcomes. First up, the return. The expected return was calculated at 2.28%. The actual realized return came in at 5.43%. Next, let's look at the drawdown. The maximum expected drawdown was planned for 5%. In reality, the realized drawdown for the cycle was lower at 4.51%.
And finally, the time element. The planned duration for this cycle was 25 days. The realized time it took to complete was 72 days, which was quite a bit longer than originally planned.
This has been a review of one structural observation record. It's important to state that this is a record of an observation, and of course, any such observation requires further validation. More documentation is available for review.